Hello, traders. It is Monday, the 30th of December, 2019. The last Monday of 2019 is almost behind us. Thanks for joining me here today. I expect that attendance will be very low, which is normal for the last couple of days of the year. With the New Year's being placed right in the middle of the week, folks are mostly gone, have been gone for the last couple of weeks. So here we are, though. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. Between the technical issues I've had, plus the holidays and so on, I have not done a trader bite since the 19th, which is extremely unusual for me. But this year is definitely chock full of events, and I'm happy to be here today, catching up with you. The overall market sentiment today, after new all-time highs on Friday, which were made right at the open. Friday, the S&Ps opened at 3250.50, which is the mid-century figure plus a measured move high. Sold right off back down into the um, the top before the rally on Thursday and sat sideways for most of the session before selling off into the close. The Friday close was relatively weak. Delta being what it is during the holidays, Friday's volume was only about 780,000 contracts, which was actually pretty heavy for this time of year. But the delta was negative from the start, and it looked like the market that participants were some taking some profits off into the weekend. Now, the biggest news that's driving us this weekend is that Vice Premier, what is his name, Liu He, has flown into Washington over the weekend to sign Phase One trade deal in Washington. I have some pretty strong opinions about this trade deal. As many researchers have pointed out, people that I follow on Twitter, that the trade deal brings us back to basically the same purchase levels as we had when the trade war started. In fact, there's a slight deficit. It's slightly lower. This trade deal is really political in nature. It doesn't serve much more than that. It did not accomplish what was expected, which is protection of intellectual property, the reduction of subsidies to competing companies within China, the fact that the Chinese government owns a lot of things and subsidizes them, and things like that, which I don't think can fundamentally change. But here we are. The markets is paying attention to this particular thing and this particular news event, and it's finally getting signed. What is getting signed is up for question, but whatever. I'm not a politician. I'm just following the price action, and what the price action is saying in the overnight session is that the market doesn't really care about this, and overall the markets are sideways with a mixed sentiment. Crude is a little bit higher at 62.13 on the Feb contract, up 41 cents or 0.63%. The cable is at 131. It's the second strongest. Cable got as high as I think 135 on that election. Uh, um, uh, a couple weeks ago, and has come off, and it's at 131 again. The Nasdaq, Dow, S&P, and Russell are all above settlement, with the bonds lagging. The bonds are way off, down a handle and 15 ticks or 0.94% on futures pricing. Trading, the March bond is trading at 155.14. So there's a slight skew towards risk appetite, but I've got to tell you that it's really important to stay cognizant of the fact that most participants are gone, that the market, the direction that the rally that the market has taken, for example, on Thursday, The market moved, the S&P moved from 32.29 to 32.44, which is a pretty decent rally into the close. But it did so on 394,000 contracts in RTH versus 1.1 million. It's kind of moved up on thin air, and I do expect that there will be somewhat of a readjustment if we were to follow standard auction market theory or the auction process. We are likely to retest down into the 32.26 area on the reopen, which isn't too far. We have a couple of gaps beneath us and so on and so forth. So that's where we are. In terms of what's ahead, really we have several. We had goods trade balance came in at negative 63 billion. It's a lot. But that's actually better than the forecast at negative 69.9 billion deficit. And also we got wholesale inventories expected 0.3 and got 0%, which is actually better. Today at 8:42 a.m. Chicago time, 9:42 Eastern, subscribers to Chicago PMI will get that release. It could be a mover. The forecast is for 47.7. And then we get pending home sales at 10 o'clock Eastern. Pending home sales expected at 4.7%. Dallas Fed at 10:30 Eastern. And then there's some 6 and 3 month bill auctions as well as 52-week. And that's pretty much it. This evening, China releases its MBS manufacturing PMI, which is considered a high impact figure. That comes out at 8 p.m. Eastern and is expected at 50.3. I don't have much to review other than to give you an overall perspective on what's happened with this market. Again, I've been absent for the last, I don't know, five trading days or something like that. But overall, let's take a look here. This is the big picture. This is the composite day session only. And as I said, we have several areas where the structure seems somewhat weak. We still have a little gap remaining there, a little gap there. There are quite a few gaps. The market is really in a roaring uptrend coming into an election year, coming into the end of the year holiday, and we're coming off of all-time highs. As you can see, the range has dropped off quite a bit, and so has volume, and that's expected to continue until later in the week. Now, the 2nd of January tends to be relatively active, actually. Remember, it's the beginning of the month, so there's going to be positioning by the OTF on the open of the month, allocating to risk or readjusting portfolios or whatever, or allocating out of risk. So I'm expecting Thursday to be somewhat active as the first day of the year. It was last year. But the remaining, compared to December a year ago, which was just an amazing trade, the January trade when we came back appeared to be almost on a different level in terms of the quality of movement in the market, and it's almost like somebody hit the air brakes on the market and just kind of made it go dead for the first couple weeks, 3 weeks of January or so. Not sure what to expect this year. It doesn't mean that we will have the same thing this year as we did last year, but just be aware that we've been in a pretty uproaring market. And if you're wondering why that is, it's really nothing more than the fact that we've bloated the deficit quite a bit in the last year, and the balance sheet for the Fed has really V-bottomed and has expanded quite a bit. There's quite a bit of money flooding the markets, and that money very often is spent because it's cheap money. It's being spent to buy back stock. So it's almost like It's almost like a market that's on consistent life support and is not. We don't know if it can stand on its own just yet. Again, I'm not a global macro type of guy. But the just looking at the numbers, the actual figures, it just seems to make sense to me that this rally is being driven by monetary policy more than anything else. So that's where we stand. If you look at the two areas I've outlined, these micro composites right here, let me remove their info boxes. These are the consolidation or balance areas. Okay, so you can see that the next most attractive price below is 3,200. Well, actually, the next most attractive price below is down here at 32.26, I believe. Yeah, 32.26 and a quarter. That's where balance is. We do have a nice high volume node up above, right up here in the 43 area, which is where we are this morning. The high overnight is 44.75 or something like that. But once we get into the 32.26, we have a small gap zone. And then the next most attractive area is 3,200, 31, it's actually 31.99 and a quarter, something like that. And then beneath that is this next big balance area, and you can see that the market has been very methodical. We gap up, we go sideways, we gap up, we go sideways, we push up, and it's doing this push flag, push flag, push flag. Very, very bullish action. We have not had a pattern which I like to watch out for, which is push, flag, continue, fail, come back, unable, and then flag downwards, flag downwards, flag downwards. Until that happens, we have a pretty healthy uptrend, and it just isn't wise to get short. I'm sure those of you who still believe that the market's overpriced and so on are still shorting, but let's face the facts. The facts are the market's at all-time highs, and it's just the easier money is on the long side on a swing basis, on an intraday basis. Early on, we might make some money on the short side, like on Friday, on Monday of last week. But in general, the day ends up going higher by the end of the day. So that's where we stand as of right now. The overnight session not showing much promise at all. Here's the overnight session. Very compressed range. So I'll expand it here. This whole thing's about 8 points of range. The overnight session has put in a weakish high. I did expect it to push. By the time I woke up this morning here in Chicago and came in to prepare for today's trade, I did expect it to push into 46 from Friday, but it was unable to do so. It put in several tops at 44 and a quarter. We've got a legit double top there on a weak high with a decent taper on the low. To me, this looks like the action is likely to continue higher into that 46. Again, not expecting very much in today's action. It's one of those days where it's best to keep our expectations tempered. This is ctbookmap.pro. You can find that at ctbookmap.pro. Here's where we opened today. We opened in the 39 area, tested up higher. You can see that this volume was here and got darker. This is what I like to see on an order flow scalping basis. Not to get into or encourage you to scalp, but on a scalping basis, I want to see a market that's moving up with liquidity increasing, which is what we saw here. We have a nice little collision, retest, and a fall. These are standard kind of scalping opportunities. Same here. You can see the market moving lower towards that liquidity at 37, and as market moves lower, you can see the color shifting from the lighter to the darker. You know, it starts with blue, meaning, or black, meaning relatively small volume on the bid or offer at that price, and it turns dark blue. It goes dark blue, lighter and lighter to white to yellow to orange to red to burgundy. Burgundy being the highest bid or offer in the book within the time frame of the chart. And so what that means is as price went down, you can see that bid getting thicker and thicker. Another collision and it turns the other way. And currently the book's getting stacked beneath, but so far it does look like it's just fake. There's not much really to lean on there. Looking at the overall liquidity, we have the key liquidity we have is at 32.50 above right here. That liquidity makes a lot of sense. 32.50 around Friday's high, mid-century figure, big strike price on the options, on the S&P options, and then above there we could see that there was quite a bit of volume that was sitting at 32.55, another key strike price. That volume, though, what this shows is that order shifted from there to there. It's this exact same order. It just shifted from up here to down here. We'll keep tracking it as I'm expecting the market to explore higher, take out that weak high on the open. We'll see what happens. We'll see what happens once we open. Looking at deeper depth and where the market is, we see that there's not much really above 10 points up, 10 points down. There's not much there to talk about. The next price down on the bid side is 32.30, but this map will change slightly once the market opens and the ARBs are in action. But overall, again, not expecting very much in today's session. It's really important to stay tempered, to keep our expectations tempered, and to be patient today if there's even an opportunity to trade. I'm not advocating to go out and trade it. So let's look at what's expected for today. For today, primary scenario, given the stance of the market, given what we did last night, remember, we went and held basically this support area from Thursday and Friday. In the overnight session, the overnight low is right there. It poked through by a little bit. I'm expecting some reversion. We're opening in range, in value. The value area is valid for today at 46.75 above and 39 or 38 below. I'm expecting some reversion down, and then I'm looking for the high to be taken out for it to start squeezing a little bit. But overall, I'm expecting a pretty quiet day with a pretty good, decent chance at a run into the 32.50 again on the close. That's what I'm looking for today. There's not much on the tape in terms of news that could drive this. The secondary is we push into the 46.47, find resistance, come back in, consolidate in the middle of the range, and then push into Friday's close to push the overnight low and move back towards that 35 area and then consolidate and come back in and hold inside of the range into the close. These are the two main scenarios. So as the market moves up, I'll be watching to see how the offer is being lifted. If there's aggression on the offer, in other words, by buyers, and if there's aggression but it's confronted with sellers, then it's an opportunity to get short for a scalp that may bring us, a couple points or whatever. Again, trade your own plan. Watch your risk first. Without risk, you're really just a gambler and you're not going to last in the business. So really just monitor your risk. Don't put yourself out there. It's the end of the year. Unless something, let's put it this way, unless something shapes up beautifully where it's almost like a no miss, I can't miss this trade type of situation, it really isn't worth putting something on. I'm just being honest with you. I'm sure your broker doesn't appreciate me saying that, but that's just a fact. And unless there's something really outstanding going on, it's not worth putting a trade on and then not finding out if it'll work or not for an hour while the market just sits sideways, kind of diddle-daddling for the session. I'll leave you with that. I'm not sure if I'll be here tomorrow. Hopefully there's some action. I'll post a notice in either case. If I'm not here tomorrow, I'm going to, with all my heart, wish you a fantastic 2020. I hope all of your trading and other dreams come true in this year. It's promising to be quite a year this year with the election and a bunch of other stuff going on, and I just wish you the best. And if you're not here until Thursday or Friday or even next Monday, then we'll kick off the year strong and get back into the routine and really pay attention to the markets. So I hope to be tweeting more this year, and hopefully you'll consider joining Convergent at some point and taking a look at what we're doing there. Good luck. I wish you the best. Take care.